This video will be concerned with reward management. Human resources are central to an organization's success and goal accomplishment. Organizations need people. They need people to implement their corporate strategies. They need people to perform the tasks and carry out the duties that are required in order for the organization to survive and flourish. So it's important that we look at the remuneration and the benefits that flow to the personnel, flow to the people who are carrying out these tasks, and that will enable them to continue to work for the organization, to enable them to survive in life and pay their bills and be properly remunerated for their efforts. The main purpose of managing reward systems is for an organization to retain its human resources. Clearly, if an organization doesn't pay sufficiently, then the personnel, the workers, the employees will look for alternative work, for alternative engagements and occupations, and will perhaps move from one organization to the next because they need higher remuneration to fulfill their aspirations in life as well. So it's important that the organization pay sufficiently to enable the employees to stay with them and to share in the success of the organization and to share in the success of their own efforts for the organization. Reward schemes are developed as an incentive to maintain or increase employee motivation and we've got an intruder on the right corner. Reward systems or schemes are developed as an incentive to maintain or increase employee motivation and commitment. It's important that the employees are engaged in their efforts. They're engaged with the organization. They understand the direction in which the organization is traveling. They empathize with the desires of the management. They believe that the organization is doing a good job and they've got a future, they've got a career with the organization. So in order to bolster up their motivation and their commitment, appropriate remuneration schemes should be put in place. The employees need to be rewarded for their efforts. So reward systems can be financial or non-financial. Financial rewards include salaries and bonuses and commission and profit sharing. There may be others, I'm sure we could add into this, but those are the main types of financial rewards. So we think of the employees being adequately and properly rewarded for their efforts, rewarded on a scale that will ensure that they are motivated and that they are diligent and apply themselves efficiently to the tasks. Non-financial rewards may also be included. These aim to satisfy the employees' psychological needs, job satisfaction, recognition, career opportunities, trust, responsibility, skill development opportunities. So when people work, when the employees take on the tasks within the organization, they expect remuneration. They have family commitments, they have household bills to pay, they want a particular lifestyle, they want to be rewarded for their efforts. That's the monetary side. But they also want psychological payback. They want recognition for a job well done. They want to be thanked and congratulated. They want to be treated as human, in a sense. They want to be singled out and acknowledged by the employers as having done a good job, having applied themselves well, and having made an excellent effort in meeting targets and in moving the organization along. So there is a psychological need that the employees have in addition to the financial one. Now, job evaluation. Well, traditionally wages were negotiated between managers and employee representatives. So if we think about wages, and wages normally are paid perhaps every week and paid usually to manual workers, whereas salaries tend to be paid usually every month and paid to managerial or special workers within the organisation. But traditionally, wages were negotiated between managers and, let's say, trade union representatives, and they would argue over the various tasks to be performed and the commitments required on the part of the workers, and the management would try to ensure that the pay, the wage bill was kept under control, and there was negotiations. It may result in strike and disputes, but at the end it was hoped that there would be a solution that both sides, both management and employees, would agree, and there would be, in a sense, an equilibrium wage, a balanced wage where both sides were in agreement. In the public sector and local authorities, these established a pay guide system on a national basis. Now here I'm particularly mentioning this in the context of the UK. It may vary from in other countries, but in the UK the public sector would again negotiate with employee representatives, say trade unions, but also the public sector could be the local authorities, it could be the health service, or it could be central government itself, and these would negotiate with the employee representatives and try to establish a pay grade system on a national basis, so that the same pay for the same activity, the same work, was applied throughout the country. And that was felt to be an efficient way of going about running a very large organisation, as indeed governments are. The pay grade system suggests that all employees on the same grade would be paid the same wage despite their location. So in the context of the UK, let's say workers working for central government, working for the government directly, would be paid a certain amount to perform a particular task, while workers in different parts of the country doing exactly the same task would be paid the same amount as well. So it was national pay negotiations. Wage determination is now used in companies across the UK to determine jobs and pay rates. Jobs are ranked under a grading system from which pay scales is devised. So jobs tend to be ranked. These are manual occupations, these are clerical, these are professional, so there are different grades, and workers within each grade are paid accordingly. There's a pay scale allocated to each grade. Job evaluation provides consistency amongst employees and organisations across the UK. Excuse me. So job evaluation is a way of looking at the tasks involved in particular jobs, particular activities, and trying to assess whether the pay associated with those tasks is appropriate. Now this applies to a wide range of occupations, from doctors to teachers to manual workers for central government, right away across. So what we have are classifications of workers, and then the classifications are paid accordingly. Now the types of reward systems, well, first of all, the basic rate. The basic rate is referred to the minimum rate of pay each employee is entitled to receive. That's the basic rate. That's the minimum that they can get, the workers can get. It's the basic rate. So it's referred to the minimum rate of pay each employee is entitled to receive. Employees are able to increase their earnings by, say, negotiating for benefits, which is not receiving pay, but it's receiving payment in kind. It could be the use of company cars, or it could be health programs provided by the management, or it could be support for purchasing special items which are used during work, specialist clothing and so on. So these are benefits, extra holidays perhaps, or the occasional day off, or whatever it is. They're like payments, except they're received in benefits. There's also overtime. Manual workers, work, let's say, for 40 hours a week or 37.5 hours a week. And if they work more than that, that would be classified as overtime. So instead of finishing, let's say, at 5 o'clock, some would perhaps finish at 6 o'clock. And that means there's an extra hour which will be paid. And in order to induce the workers to work extra, that payment may be at a premium. It may be 1.5 times the basic rate. So if workers are paid X pounds per hour for the basic rate, they will be paid X plus, let's say, 0.5 of X. So they'd have 1.5x for the additional hour work. There could be all sorts of incentives offered. As I said, it overlaps with the benefits, but incentives in terms of extra days off, or introduction of flexible working in some areas, or some sort of perks that the employees will receive for their efforts, and that's a way of increasing earnings. They receive incentives to work harder and to acquire skills and perhaps pass examinations and gain competencies and apply themselves effectively in the workplace. Could be a bonus. Perhaps at the end of the month, if the company has done well, it's a lot of sales and projected profits are high, the workers will be paid a bonus in addition to their basic pay. So it's a reward for them for working hard, meeting targets and satisfying customer needs and promoting the image and reputation of the business in the marketplace, producing efficiently so the company is able to effectively fight off the competitors and gain a competitive advantage in the marketplace. And as a reward for all of that, the employees may be paid a bonus. Now let's look at time rates. These are the most common method of payment in the UK. Time rates are by far the most popular way of remunerating workers. Employee is paid for the number of hours worked in the organisation. So the employee would contract with the employer to work, let's say, 37.5 hours a week, and they will be expected to turn up for work at, let's say, 8 o'clock or at 9 o'clock and to finish at whatever time during the afternoon. So that after 5 days they will have put in 37.5 hours presence in the organisation working for the employer. Time rates refer to the number of hours worked. This can be as weekly or monthly. Generally speaking, it's a weekly time rate. It's 37.5 hours, or perhaps some companies might have 40 hours. But that's usually the standard rate, the standard time required by companies. But it may be calculated on a monthly basis, and the rates that are paid could be weekly rates. So in this case, the employees say working 37.5 hours a week will be paid so much at the end of the week to reward them for putting in 37.5 hours effort for the company. Or of course they may be paid at the end of the month, in which case it's more. Obviously, it's a factor of whatever that brings it up to the monthly rate. So the employees, the point is, put in time for the company, and in return are paid either at the end of the week or the end of the month. Time rate rewards experience rather than performance. So it rewards experience, and it doesn't really reward the performance of the worker, and that's one of its drawbacks. It concerns the value of the task, not the employee's skills and capabilities that they're bringing to the job. So time rates are very crude in some respects. They don't look at the skills that the workers have or have acquired and how they apply them and what their productivity is. It just looks at their presence in working on particular tasks. So the employees are there physically working on those tasks, and that means they will be paid. Some workers may of course be very efficient and have many skills, but time rates don't discriminate in this way. They don't make differences. They don't accommodate the differences, I should say, between skilled and not so skilled workers. The fact is, both of them, both workers or both sets of workers, are doing their 37.5 hours a week and will be paid the same. Employees are bound by weekly contracted hours, which they must fulfill to receive their pay. Overtime is paid for any extra hours an employee undertakes outside of the contracted hours. So the employees are paid for the standard working week, whatever that is. 37.5 hours is usually the amount of time employees are required to work. And anything they do over the 37.5 hours is overtime, and it's paid at a premium, as I said earlier. Overtime pay is not relevant in management and senior positions. Managers get fixed salaries despite the number of hours they work. So managers may work 60 hours a week, but they'll still get the same salary. They may work 30 hours a week, they'll still get the same salary. So managerial staff don't get overtime pay. Now, the advantages of time rates. Well, all employees working on the same job will be paid the same amount. So it's felt, to some extent, it's fair. There's no discrimination between the workers. Everyone doing the same job, putting in the same number of hours, will be paid the same amount. It's easier for organisations to administer and predict labour costs. They know how many hours they expect the workers to be there, and it's a simple calculation to work out the wage bill. The number of employees times their basic pay. Plus, of course, some allowances for any overtime work that they may have put in. It provides employees with stability, which leads to staff retention. The employees can work out exactly what they're going to get at the end of the week or the end of the month. They know that they have been on the premises for the required number of hours, they have worked for that number of hours, and they will be paid accordingly. And with that stability, someone will like it and they'll want to continue with the organisation, and that leads to staff retention, which of course saves the organisation considerable sums because they don't have to engage in recruitment exercises. It's a suitable method for general roles, for general work. It may not be suitable for specialist work or for highly paid occupations where particular and very perhaps rare skills are required. But for general roles, general tasks of the company, it's a very suitable method of payment. The disadvantages, well, employees do not have any incentive to increase their productivity. They are paid despite the level of output, which is a major disadvantage of time rates. The employees have no incentive to improve themselves because they still get paid the same. So why improve? Why go through the trouble of acquiring new skills or competencies, or being involved in training exercises, or perhaps trying to achieve a qualification from a local college? Or there's no need for it, because they're still going to get paid the same. So there's no advantage to the employee, which means the workforce of the organisation will be fixed in their capability. Payment by results. Well, payment by results was introduced to help increase employee motivation and productivity. Under this system, the results, the outcome of the workers is important, and the workers, the employees, are paid according to the amount they produce. The concept of payment by results, well, employees are paid by the amount of output. The level of reward depends on production. The more they produce, the more they get paid. So it's in the workers' interest to work hard so that they get paid more. For example, an employee is paid, let's say, £1 per unit, and the employee produces 500 units, the employee is paid £500. If the employee produced 100 units, they would get paid £100. So it's rewarding the effort that is being put in. It is entirely dependent on the employee and the amount he or she produces. So the employee may select what reward he or she wants. If they want a big reward, they will work hard. If they don't want such a big reward, they want to take life a bit easier, they can work less. There may be some minimum standard that the organisation requires the workers to fulfill. They may set that lower threshold to avoid people just wasting time and wasting the resources of the organisation, perhaps holding machines idle, or perhaps not using machines or capital equipment in an optimal way. But over and above that, the amount paid to the employee is flexible. It depends on their efforts. The advantages of payment by results. Well, the employees are motivated to work extra hard in return for more income. Well, that's an advantage. There are cost advantages. Wages, for example, are related to the level of output. So the more that's produced, a linkage can be put in place with the wages that are paid. So it's easier for the management to try and calculate the unit cost of the output. And that, of course, may be important for pricing. Disadvantages. Well, in some organisations, output may not be easily calculated. Or what's the output of a teacher? Difficult to measure. The number of students who pass the exams. Well, is that the function of education, to pass exams, or does education have a wider function to equip people for tasks in life and give them a rounded education? It's difficult to work out what the output of a teacher is, or what's the output of a doctor, the number of people who are not ill. It's difficult to measure that. So there are some occupations where payment by results cannot be applied. Sorry, health and safety needs may be neglected in order to increase productivity. Sometimes when workers are really keen to produce a lot and get a bigger reward, they may cut corners, which may lead to health and safety issues. They're not as particular about health and safety issues. They're rushing to complete a lot of the product so they get paid more, and they're not paying attention perhaps to issues like health and safety. Now, performance-related pay. Well, performance-related pay is a method of rewarding employees a pay rise, a lump sum or a bonus depending on their performance. So performance related pay is, in a way, it's similar to the previous one, but uh, it's it's a way of looking at the performance of the employees and rewarding them accordingly for their performance. The performance is set against previous appraisals and targets set by management and employees. This is a managerial process where employees meet with their line manager and discuss issues about training and productivity and what they're finding easy and difficult and so on, give the experiences and give some feedback to management. But that is then recorded, and some plan will be devised between the line manager and the employee to try and rectify any shortfall or any training needs that the employee can identify. And then there's a follow-up appraisal, perhaps in a year or in 6 months, depends on the organisation. There's a follow-up appraisal, and the performance of the employee is then measured against what was calculated from the previous appraisal, and perhaps some reward is issued accordingly. Once the employee has achieved the required standard, they are then entitled to their reward. This type of method is only used when performance cannot be measured in output or sales achieved. Therefore, this is an incentive pay. So, in the case with the payment by results, there the output was measurable. But in some cases, output may not be measurable. As in the case of teachers, for example, difficult to measure their output. They are performing a very difficult and a very important job, but difficult to measure their output. But teachers, during the appraisal, meeting with their line managers, may agree that particular skills need to be developed, and the need to acquire new ways of teaching and new knowledge and so on. And at the following appraisal, if they've achieved that over that period of time, the agreed period of time, let's say a year, if they've achieved it, then they should be eligible for some sort of performance-related payment. Their performance will be different. They have acquired new skills. So it's not looking at the quantity of their output, it's perhaps looking at the quality of their output as well. The process includes reviewing individual performance on, let's say, a yearly basis. It could be 6 months. Agreeing a set of targets, objectives, known as performance appraisal. So they have to agree a set of targets for the coming year. The line manager and the employee agree a set of targets, and the employee then sets about trying to achieve those targets. And in a year after the appraisal, when they meet again, the records are produced, and then the extent to which the employee has met the targets agreed will be assessed, and the appraisal will be awarded on that. Rewards can include cash bonuses, salary increases, and other benefits. Now, the advantages, well, may be considered as a fair approach. It links pay to performance, so that seems to be fair. People get paid for their performance. The people who have good performance at work get higher pay. People who are just drifting along and quite happy with their existing remuneration and not making a particularly strong effort, they can continue perhaps in that role. But it rewards those who set out to get higher performance. So it helps to motivate staff. It's goal orientated. The goals are worked out during the appraisal meeting, and if the employee meets the goals at the subsequent appraisal, they will be rewarded. So it helps organisations to save money, as they target reward on employees who perform. So the organisation has been very specific about who should be rewarded. Also, the employees receive feedback on their performance, which is important. The employees then know their strengths and their weaknesses, and perhaps why they're not receiving any additional remuneration or any particular rewards, because perhaps they haven't achieved what they set out to achieve, what was agreed at the previous appraisal. So the employees are getting feedback. They're knowing they know what they have done, they know what was expected of them, and they should have anticipated the response as a consequence. They should know what the management are thinking, because perhaps they haven't hit the promised goals that they set out to achieve at the start of the period. Now, perhaps a year on, they're going for appraisal, they haven't achieved the goals. They can't really expect to be rewarded significantly. There's a huge emphasis based around a results-orientated culture. Many organisations like this approach because individual workers have individual plans, and they're all working to try and achieve particular objectives, and when they achieve them, they are rewarded. So it leads to better motivation, better application to tasks, and more diligence in terms of their attendance, their performance when they're at work, and they're more involved with the organisation. The disadvantages: there may be disagreements regarding methods of performance measurement and employee performance. It may be the line manager thinks the employee has not met what he or she set out to achieve, but the employee may disagree and think they have met it. So there needs to be some sort of reconciliation when disputes arise of this nature. There needs to be some way of, as far as possible, objectively testing whether the employee has achieved what the employee set out to achieve, or if they haven't. There should be some way of looking at it and testing it. That's the ideal. Sometimes it's down to what the employee says and what the line manager thinks. But in the case of dispute, it should be referred on to perhaps a more independent reviewer who will look at the facts and perhaps make a decision. And that will be seen as somewhat fairer or more appropriate when there is a dispute of this type. The method does not encourage teamwork, as employees are encouraged to work individually. So in organisations where there's a significant amount of teamwork, different approaches would have to be adopted. This particular performance-related pay approach is more individual. It can cause rivalry amongst managers and employees. There can be rivalry and disputes as to whether the objectives that are required are fair and reasonable. There may be disputes as to whether the organisation fully supports the employees in trying to achieve the targets set out. If there are training programs, or if there's financial support for the employees when we have to attend external courses. And there may be issues between the managers and the employees arising out of this, a sort of a rivalry, a situation of bargaining arises between the two of them, which is not the intention of the scheme. The scheme sees the employees working to particular goals, meeting the goals, and it should be obvious to the line manager and to anyone else that they have achieved the goals they promised, and be rewarded accordingly. That's what's meant to happen, but it could be that it generates into rivalry and negotiations and disputes. And there's also a consideration as to whether performance-related pay actually motivates employees. It may not. some employees may have appraisals and not really worry too much about the appraisals, and whatever objectives are set out during the appraisal meeting, they may not take them seriously. They're not really that motivated. They're not that interested. And this can happen for a variety of reasons. Perhaps an employee is about to retire, and the organisation has an appraisal meeting because they haven't retired yet. They have an appraisal meeting and they set out some set of tasks the employee should ideally meet. Well, the employee is about to retire, so why should he or she work towards achieving those outcomes? There are all sorts of issues associated with performance that may not be related to any appraisal system. Sometimes workers may perform well for their own satisfaction, not because it's been written in an appraisal form, because they like to work to a particular standard. Other workers may not work to a particular standard because they are really not that engaged with the company, they're not impressed by the company, they don't like particularly the tasks they've been given, they don't see their future with the company, and they're not going to make any particular efforts to meet the requirements set out in any appraisal system. Now, profit-related pay. Well, profit-related pay is another reward incentive which relates to pay and company profits. Employees receive a bonus when the company is making a profit. However, during bad times, the employees are safeguarded. So the employees are rewarded when the company is making profit. When the company is not doing so well, in a sense, they fall back to their basic pay. They fall back to some agreed minimum. But of course, it's in the employee's interest that the company should make a profit, because if the company makes a profit, they will get bonuses. This method implies that employees are motivated to work harder to reap their rewards. So in this one, it's an incentive scheme again. The employees want to work hard because they want to achieve their bonuses. The method imposes a strong belief in teamwork. The profitability of the business depends on the activities of all the workers. So if some of employees are working hard and others are not, there may be dispute between the employees. The ones who are working hard are motivated to get the bonus. Employees who are not working that hard, who are not particularly worried about the bonus, there may be disputes between the two groups of worker. So it requires good direction for all of the workers. All the workers should be pointed in the same direction. All of the workers should have the same objectives, ideally. They should all respond to the bonus system. They should all be working equally hard. If they don't, disputes can arise between the employees, which may be difficult for the management to handle. Companies take on this method because it's seen as a tax-efficient means for paying out bonuses. It's a tax-efficient means because the company pays out bonuses. It comes out of their profits, so they have less profits to be taxed. So that may be a way of doing it. Of course, they could have paid the same sums as higher basic wage, and it would have come out of profits in the same way. It's just by doing it this way, they're hoping to generate interest in the business and harder work from the employees. Not a popular method, as companies prefer incentive schemes based on individual performance rather than group performance. So the companies the schemes are based on individual performance rather than group performance. So ideally, it's the whole group, with the group of workers within the company that will generate the profits. But as I said earlier, some may work harder than others. So most companies prefer to base their remuneration on individual performance rather than group performance. So it's not that popular for that reason. By the way, I've just noticed on the slide here that companies seem to be spelled with an apostrophe S. That's our bad spell checker. I do apologize. So most companies, C-O-M-P-A-N-I-E-S. Please note. Point 3. This method is also reliable when profits are unpredictable, and this means that it's not reliable. If the employees are working hard and profits are not predictable, sales are not predictable, or there may be costs or issues that are outside of the company's controls, the employees are not sure if their hard efforts are going to be rewarded. And also, there's a gestation period, there's a longer period. They have to wait for all of this to be worked out. The employees don't know how the company's doing on a day-to-day basis. They have to wait for the end of the accounting cycle when the profits are calculated and they're informed. So really they're working in hope, working hard in hope that the company is making profits. But they don't know exactly. There are examples of this type of profit-related pay. Boots the Chemist, for example, and the Bank of Scotland. These may change over time, so there will be new examples over time, and it's best to check the internet from time to try and find up-to-date examples. The advantages. Well, employees show more concern for organisation success because the employees at least stand a chance of getting good bonuses at the end of the year or at the end of the accounting cycle. The employees are more concerned, therefore, with the organisation and more engaged with the organisation. The downside is, as I said, it may lead to disputes between the employees, some of whom are working hard and some are seen as not working so hard. So why should the ones who are not working so hard benefit to the same amount as the ones who are working hard? So disputes could arise. And secondly, of course, the employees are working in the expectation of getting profits, which may or may not happen. Depends on the overall cost structure of the business, the pricing of the product, and taxation, and so on. So they're working in hope of getting profits. And also they don't know exactly how the company's doing or how well it's doing on a day-to-day basis. They have to wait to try and see how well the company did and what bonuses they will get. Encourages cooperation and teamwork. There's no them and us attitude. Generally speaking, this type of pay system would encourage all of the sections of the labour force to pull together, management and labour, including different professional levels within the labour force, and everyone's moving in the same direction because they all want the profit. So it's not the employees looking at management and denigrating management for not working hard, or it's not for management to blame the workers for not working hard. It's everyone pulling in the same direction. It's looking at the organisation as one big team, and the big team is trying to generate profits. Group pressure can raise performance levels of individuals. When some individuals are seen as not working that hard, others who are keen to get the bonus may put pressure on them. They may exert pressure on employees who are not performing well. And this is not the management putting pressure on the employees. This is other employees putting pressure on them. So the ethic is to work hard within the organisation to try and receive the bonuses. The disadvantages, well, it does not acknowledge individuals' performances. So some individuals may work very hard indeed, but they'll get the same as the people who didn't work so hard. And in that sense, it's not very fair. Having to rely on others may cause frustration amongst workers. Sometimes, if work is sequential, then one set of workers will depend on the output from a previous set of workers. Well, if they're not working very hard, it can lead to frustration, could lead to anger, because one group is slowing down everybody, and therefore the bonuses are likely to be less. So it may lead to frustration or even anger between different sections of the labour force, between different sections of the workers. One poor performance from an employee will affect the overall group performance. So everyone's important in this system. And that's why employees may watch one another to make sure they're all working hard to try and achieve the bonus. There may be peer pressure on workers to work hard. If one worker or a small group of workers are not working that hard and receive the same bonuses, that's felt to be unfair. But even worse, that group of workers could have slowed everyone down, so the bonuses are less. Skill-based pay. Well, skill-based pay is another type of reward incentive which rewards employees based on their skills and competencies. Reward is increased by the level of skills and knowledge. So highly skilled individuals within the organisation will be paid more. And that is really an incentive for everyone else to try and acquire those skills and those competencies, for them to learn, to apply themselves, attend training courses, perhaps attend outside organisations for further education and so on, to try and achieve the skill levels of these highly paid individuals. There's a growing need for multi-skilled workers, and in this case the way to set up this within a company, set up multi-skilled working, is to reward the workers for having these skills and enabling the organisation to have flexibility, because the workers are multi-skilled, are able to cover different tasks. So the more skills the workers have, the more they get paid, and that means that the people who don't have the skills have an incentive to try and acquire those skills. Managers use this reward system to encourage employees to take on more skills, which in effect will promote the organisation's staffing arrangements. So the more the workers become skilled, the more they will receive. And that incentive is hopefully will enable the organisation to have more flexibility, to have more productivity, greater continuity, better working environment, more motivation. They'll have a lot of positive effects associated with it. Flexible benefit schemes. Well, these have become very popular methods of rewarding in the UK, maybe in other countries as well, but also, like in every case we've discussed, some of these schemes will be applied in some sectors of industry and not in others, and some will be applied for certain periods of time and fade away, and it'll be moved to a different system and so on. But it's important to know what it is. So flexible benefits or cafeteria systems are compensation packages which are substituted for pay. So these are recompense to workers for engaging in activities within the business and performing at a high level, but they may be paid in various ways. They may receive basic pay as remuneration, but receive considerable benefits as well. Or sometimes they may receive basic pay and some performance related bonus plus some additional packages which may not be monetary. There may be subsidized holidays or company cars or whatever it is. So there may be additional payments in kind. These packages comprise of things like accident insurance, pension schemes, medical or dental care, creche facilities, holidays, company car, laptop, social clubs. These are benefits in kind that the organisation can give to its employees, which will enhance the quality of their life. So they get payment, remuneration, but they also get these extra benefits, which motivates them to apply themselves harder. These packages are adopted to retain employees. Employees have to have an option to choose which package suits them best. So the employees can pick what they'd like. They like extra holidays, or they like membership of social clubs or medical schemes or whatever it is. So the employees are content within that working environment. They are interested in the working environment because it looks after them. UK companies, COMPANIES, UK companies are becoming aware of the importance of motivating employees through reward systems. Well, I think that's a global move. Most companies are interested in ensuring that the employees apply themselves effectively and with good productivity within the workplace. So they're looking constantly at ways of remunerating and rewarding employees to encourage that motivation. There's also a need to keep developing reward systems in order to retain employees. Recruiting new employees is expensive, so it's important that the companies retain the existing set of employees, but make sure that the employees are enhancing their skill levels, and rewards should be commensurate with skills, with their application within the workforce, with their reliability, with the efforts they make. But higher remuneration will also mean, the chances are, better retention rates. There's also a greater emphasis on monetary rewards. Money plays a huge factor in motivating employees, and organisations use this fact to their advantage. So organisations must pay adequately and must pay appropriately for particular skills and particular productivities and for the effort that the employees put in. If they do that, they'll have more retention, more productivity, better working environment, less disputes, and also the greater productivity, greater output, greater presence in the market, better competitive advantage, and better long-run prospects. So having the right remuneration scheme is important. And what we've looked at in this video are various schemes that have been suggested and have been used throughout industry and commerce, and some of them have long histories, some have been tried out and have faded away. All of them have advantages and disadvantages, and it's important for you to go across the video again and look at the various types of remuneration packages that are being offered, and look at their attributes, their what's involved with them, and also look at their advantages and disadvantages, because these are important distinguishing factors between each type of remuneration system. And if you do that and have a clear understanding of the differences, then you have mastered this topic. That's all we're going to deal with in this session, so let's leave it at that and say thank you for watching.